Hi, Karen Spell here. Welcome to this edition of 55 Active Adult Living. Today we're going to be discussing what are the financial considerations when choosing the 55 Active Adult lifestyle. They're pretty much the same as when you're going to make any home purchase with a few exceptions. That is, what is the initial price of the home and whether you're going to afford it cash or with a mortgage. We'll talk about that more in a minute. And also the monthly obligations to maintain the home. These include homeowner's insurance, possibly flood insurance, taxes, principal and interest if you're getting a mortgage, and the HOA dues. So this is more important than ever in this demographic, which is typically on a fixed income. So you need to know what those obligations are and see if that fits within what your income is from now until the rest of your life, probably. So let's start with taxes. Taxes can vary greatly depending on what part of the United States you're in. The northeastern states are substantially, like 3 to 4 times higher than the southeastern states. For example, the same house in New York is going to have taxes of $12,000. That home with that value in North Carolina are going to have taxes of $3,500 to $4,000. So substantially different. The next thing you need to consider is homeowner's insurance. This also can vary depending on what area of the country you're in. Homeowner's insurance differences are mostly attributable to whether or not you're in an area that experiences hurricanes and can have hurricane damage. So all of Florida, anywhere near the coast of any state, is going to have higher premiums. And when I say higher, again, 4 to 5 times higher than inland. So anywhere in Florida, typically the south part is the worst or the highest, is going to be 4 to 5 times higher than inland, again, say North Carolina. So something to consider. You would get those lower taxes in Florida, but you are going to have those higher insurance premiums. So you'll want to know that going in. The other thing with insurance is if you're in an area that requires flood insurance, that's determined by FEMA. That's a division of the government, and it's based on how high above sea level your home is. Then you're also going to have to include that in your monthly payment obligation. If you don't have a mortgage on your home, you don't have to have insurance, homeowners, or flood. It is recommended, of course, that you always have both, or you're going to be responsible for whatever damage, whether it's total demolition of the property or just the roof blows off. So you are going to want to make sure that you know what those are. The other thing you need to consider are the homeowner's dues. This is driven largely by the quantity and quality of the amenities that the community that you're looking in has. So the premier communities, the ones that have the indoor pools, the large clubhouses, all the venues for pickleball and tennis and all the other things, they're going to have much higher HOA dues. This is not only to maintain those amenities now, but to provide for reserves to repair or replace those amenities as necessary in the future. So when you're going to purchase, you want to make sure that you know what your monthly obligations that you want to be comfortable with is when you start looking for a community. So of course, the other thing is the initial price of the home. So if you're buying cash, you know how much cash you want to spend. And then that's the price of the house that you're going to pay. If you're going to finance part of it, you're going to want to get pre-approved for a mortgage to know how much you're comfortable with paying as part of that monthly obligation with your mortgage before you start looking at homes. A quick side note on that is a very attractive mortgage product for 62 and older, now that's 62 and older, is the HECM, HECM loan. You put approximately, depending on your age, 50% of the price of the house down in cash, and then you don't have any more mortgage, which actually lets you buy probably 40% more home than you could if you were going to pay all cash. So if you have $150,000 and you don't want any payments, you can either buy a $150,000 house, or you can buy a $250,000 or $275,000 house and still not have any payments with that loan. So if that's something that seems like it interests you, You can contact me and I'll put you in touch with a professional that can answer all your questions about it. Very attractive feature. Financial planners for many of my seniors really like this loan product. And it's just something to consider if you want to boost your buying power or you don't want to sink all of your cash that you have into your home. So when you go on your search to purchase your home, you're going to want to know either what you're pre-approved for or how much cash you have to spend. And you're also going to want to know what your monthly budget is for your monthly payments. You're going to want to communicate this information to your real estate professional. This will allow them to point you in the direction of communities that best fit your wants and needs within your budget. The other thing that your real estate professional can do is help you negotiate the price. Now, everyone pretty much knows that you can negotiate price on something that's listed on the market as a resale. What they don't understand a lot of times is that you can also negotiate with a builder on a new build purchase price. And it's not always the price that comes off. It can be incentives such as upgrades or credit towards upgrades and options and different things like that. You're going to want to make sure that you communicate with your real estate professional what your budget is and let them help you find the best home for you in the best community that you want based on your wants and needs. Okay, so next week, our topic is going to be what are some of the most popular areas of the country and how do they compare to each other? So until then, this is Karen Spell, and I'll see you in the next edition of 55 Active Adult Living.